on March 6th. The trading week is going to be March 6th through the 10th. Let's kick things off with a little risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade the money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the deal. If you're following me on social media, make sure it's a real me. Mondays and Fridays for the Pulver Report, youtube.com/Chris Pulver. Everything else, try to keep the handle the same. Facebook, Real Chris Pulver. Instagram, @Real Chris Pulver. Twitter, @Real Chris Pulver. The deal. You got it, right? Okay, let's go to the charts. This is currency strength. We just had opening bell kickoff, had a couple of chart alarms. Let me check on those really quickly on my phone. The SPY is up to 405. We're back to that monthly pivot area. I said that the bulls can retake control above 405. So we're kind of at that level now. And had some good wins last week, so pretty excited about that. So let's take a look at everything. This morning on the currency strength, euros on top after some Swiss franc strength. This was peaked out around 2:35 a.m. Eastern time, which would have been just around that Frankfurt Open. So we had some Swiss strength. Yeah, Swiss franc strength. Say that 5 times fast. And then we leveled off, euros up. Dollars coming back down towards baseline. JPY dollar about the same. CAD, pound in the middle. Oz and New Zealand collectively weaker together. So it looks like currency-wise we're showing some risk-off flows, and yet we're breaking some levels right here. So probably in equities on demand, we take a look at maybe some other bear call spreads, maybe. But we do have some exposure already out to May, out to June, out to later this month. I think we have some 331 expirations on the SPY. Look, the market and the bulls might be just trying their best. We still have to remember what the Fed is doing, what inflation data possibly brings us, and that may be where things get a little messy, right? Maybe the market's not as interested in the Fed. I think if it was, we would have seen a much more bearish reaction outside of President's Day. We had a nasty sell-off on Tuesday after President's Day. The March rate decision is still expected to show a 25 basis points hike. The question I was looking at last week was this was dropping to 50 something percent. This is up to 40 something percent. Now it's starting to head back the other way. So the higher probability yet again is a March rate hike for 25 basis points, which would bring us up to 5%, because we're currently sitting at. So you have to remember that I always give a window, which is kind of silly. But we're currently sitting at 4.5 to 4.75. This would be a 25 basis points hike. You go to May. Now you're sitting at 5 to 5.25. That's a higher probability right there. You go to June, another likely rate hike scenario. So that's 25 more basis points for March, May, and June, which is what the Fed has said. But if you go into July, this is where it gets interesting, right? This is no rate hike from June, and this is one rate hike. So if this starts to go down, this starts to go up, then the Fed is probably going to be reactionary to CPI, PCE, any type of inflation type data. Okay, so again, and it's not done. There's still a lot of runway here from March, May, and June. That if CPI numbers come in hot month to month, that we might see instead of a 25 basis points hike, the Fed might do a 50. And again, I'm sure the market's not going to love that, but right now the market resiliency is still pretty impressive. So here's what I think. If the market can somehow, I don't know, we might take a chance in here and go out through, I don't know, maybe through May and June. I think May and June is good simply because this area with the Fed tightening, I don't know necessarily with stickier inflation data how the market can justify higher highs if we're going to see tightening all the way through the first half of the year. That being said, here's where we're at for the first 3 months, or two full months and a little bit into March. The NASDAQ is up 12.54. That, of course, is if you're fully invested. S&P up 5.79. The Dow is flat at 0.77. The 10-year, which is way inverted from the 2-year and the 3-month and the 1-year, but the 10-year is up to 3.96, which again is under inflation, right? So our real growth is still suppressed. Bitcoin's up 35% off the lows, but that was post FTX and everything. So we kind of had a decent chunk to gain right out of the gates on Bitcoin. There's still room up to 26,000, 27,000. That's a yearly pivot for 2023. There's also pullback levels and pretty strong support around 20,000. So we might be stuck there for a little bit. And this was interesting. This is actually from Morning Brew. I think I have an affiliate link in my YouTube channel, but basically Morning Brew, it's just daily news. It's pretty good stuff. Formula One stock is up 26%. Leave that to Drive to Succeed or Driven to Succeed, the Formula One series on Netflix, which is pretty sweet. It's fun. So anyway, that's that. There's where we're at. Check some alerts. Check some stocks. Last week we had a big run on materials. Alcoa, we ended up making some nice money on some credit spreads at 52 by 51. We had highs up towards 55. CLF and X did pretty well. We're at 22.43. We had a close last week at 22.79, so we had full profit on our credit spreads. We're going to see if this material play continues to run. If so, it does look promising to the upside. You can see my broadening pattern right here. While I'm talking, let me get logged in and say hi to everybody. So potential broadening pattern where if this high was cleared, which it has been, and we're starting to make some new highs, I think that CLF and some other material plays have room to continue to run. Look at this high. The real exciting part would be if we get up towards $40, which is why I'm keeping my shares. I'm covered out to, I think, the end of the month, which is obviously a few weeks away, but I'm covered up to 25. I may get the stock called away, but in order to get it called away, I want to add some additional credit spreads on CLF. So we will discuss that this week in Equities on Demand. All right. Oh, yeah. Nice turnout this morning. Good morning, everybody. So Bill's in the house. Chris is here. Good morning, David. Good morning, Donna. Good morning. Gail, FK, Denise. Good morning. Bill. Good morning. Andrew, Ranjit, Joseph. Good morning, Scott. What's happening? Gary. Hello. All right. DPS. What it is. All right, good stuff. Okay, so that's CLF, Cleveland Cliffs. That's X. We're trading at 30.88. We have 26 by 27 or 27 by 26s and 28s by 27s. So looking good on that. FCX is another one that's a copper play. We're clawing back. We have some 44 by 43s. We're trading at 43.09. If we see material plays, then we're looking to get FCX back above 44. Maybe a run into 46.80 highs. And we're going to see how this plays out. Again, this is a potential broadening pattern. Connect the dots right there. I'm going to take this down to a lower thickness. And possibly right there. So broadening pattern to the upside. Hopefully, if we're coming out at these lows at 25, pretty good move out of the gates. Now, again, I'm just talking about the pattern here. Is this a broadening pattern where the market continues to go higher? If so, we take out these highs. That's really exciting to be bullish. $52 to $60 targets. But I'm also not dismissing the fact that this high or this low to this low may be a crown pattern. So does it set back in or settle back in? Past resistance becomes support. That's down to 21, which is why most of my trading so far for 2023 has been high options instead of owning shares. So we do have some shares that we own. KHC is one that I'm still working with. We're at 39.02. And I believe this Friday I have a $39 expiration, and I'll get a couple other ones out there as well. So that's one I'm still looking to get rid of for some nice shares. My profit or my cost basis now is around $28 or $29.29. So I'll lose the shares for just shy of $10 a share, which I'm pretty happy with. And of course, if it runs, let's say we run up to 40 this week. If we run up to 40 plus this week, I might roll this covered call again, keep the $39 strike, roll it out another week or two, and collect another 30, 40 cents, lower it, and just still get called away at 39. So I'm going to actively work this one in addition to some credit spreads that we have that are out throughout the year. So we're busy in stocks and options. Let me see if I have, let me go to EOD notes, check and see what we have for 310 expirations. And right now I'm only showing 9. So we don't have a ton. But if we add some additional cover calls, which I most likely will, that'll be stuff that I have to manage. Looking for 3 9s in here. I don't see it. Or 310 expirations. Anything? Where's my highlight? There we go. Uber, a $33 covered call. Oh, yep. That's for $4 a share. That'll be a big one to get called away. I've rolled Uber a few times. CLF, 310 expiration, 22.50 by 22. So if it stays where it is, then that's good profit for the week. Let's see here. What else? CLF. UNG, nice pop on UNG last week. We had an 850 by 8. That was full profit last week. It was up to $9 and change. Hopefully it maintains that with a little natural gas move. Part of me wishes I did some long calls instead of just doing bullish credit spreads. The SPY, we have a bear call spread at the 405 by 406 for 70 cents. So if we win, 70 cents. If we lose, 30 cents. Our bull put spread, we got assigned. We took a loss on that for 40 cents. So our net profit between those two trades, let's say we're correct on the SPY this week. Then we lose 40. Okay, we lose 40 and we gain 70. It's a net 30 cents. I'm not drawing that very well, but a net 30 cents, which I will totally take for being directionally neutral on the SPY and see where the market wants to go. Okay, what else? Qs. Let's see. Iron Condor rolled to 310, so that's fine. Same thing here. This was the Iron Condor, so the 310 by 309 bull put spread, the 301 by 302, and the Qs right now are trading at 301. So 301 by 302 is fine. If this is, coming back to fill some of these gaps, but it fades from there, we're going to look good on the bear side once again for this week. Okay, we also have non-farm payroll this week, news-wise. Pretty heavy-hitting news. Friday is CAD news and U.S. news. So CPI data came in hotter than expected for Swiss, which is probably where we had the lift. They might be looking to raise rates. I'm not sure if the ECB rate decision I know is the 16th this month. The Fed is the 22nd. We also have, I think, the Swiss franc on the 23rd and the Bank of England on the 23rd. There's some pretty important rate decisions coming up in the next few weeks. Aussie cash rate is tonight, expecting to raise rates again by another 25 basis points. So RBA continues to look to raise rates, RBNZ raising rates. We'll see if the Swiss is going to stay at 1% or raise rates as well since CPI data is coming in hotter. Let's go to this week's calendar. Morning, Ruthann. How are you? Don, good morning. Catherine, good morning. Richard, what's up? How we doing? What else we have? Powell testifies for what? Semi-annual monetary policy report before the Senate Banking Committee. Okie dokie. Maybe he says stuff that the market's interested in. Some speakers this week. ADP non-farm. That is the precursor to Friday. Bank of Canada. There you go. Looking to not raise rates. Okay. This could be interesting, right? BOC is already at 4.5 and looking to possibly stay there. So is the CAD done raising rates for right now? Maybe. I mean, again, that's the forecast. I think what we've seen with a lot of central banks is they're talking ahead of their rate decisions. So if the BOC is forecasted at 4.5, they'll probably stay there, and that might be a little bit of volatility between 10 and noon on Wednesday to watch the CAD. Oil had a great week last week, by the way. That's why we had a big lift in materials. We had some crazy news like oil rig counts were down to like, you know, 20 or 10-year lows or 10-year. I mean, it was like extremes. We had natural gas counts and oil rig counts were way down. So oil had a huge day on Friday. This is the daily chart. So I mean, from the wick low around 76 all the way up to 79, that's a pretty big push on oil for the day. So that was up off that monthly pivot, mind you, about 5%. So that helped give a lift to those material plays, energy plays, and oil still hasn't broken highs or lows, but it's still showing some interest from last week. All right, I'll go back to the news here. That's Wednesday. So Wednesday rate decision for the CAD expected not to change. Prelim everything, light to medium impact on Thursday. Monetary policy statement from the Bank of Japan. I don't think this is Kuroda's last day, but I think it is in March. I think it's like Friday. It's March 14th or something is Kuroda's last day. But here is a BOJ press conference, which you can see is high impact. Monetary policy statement, which typically comes out between like 11 p.m. Eastern time and 2 a.m. Eastern time from Thursday to Friday. So what I would say is from Thursday to Friday in going into next week, and we're getting to that point of the calendar where we're looking for pre-summer pushes, we might see some increased volatility on JPY pairs. So I will be looking for some shorter term trading, some good flow on the 1 hour, the 30-minute time frame, 15-minute time frame. Looking for some Japanese yen movement if we want to take some trades on that. Possible some auto deployment, GDP for the pound on Friday, and then your double whammy of U.S. and CAD news. Non-farm payroll expected to be 224, unemployment rate 3.4. Again, crazy tight job market. 0.3 on average hourly earnings, which still shows stagnant wage growth. Let's see, 6,000 for CAD. And again, 6,000, you can see these numbers are crazy, right? Oh, yeah, we'll forecast 5.5 come in 104. We'll forecast 11 come in 108. So CAD forecasts are always awful. The U.S. tends to be a little bit like the big surprise here would be if the non-farm comes in with 500K plus. That'd be a big surprise for dollar strength plus tighter job market, and it's going to continue to be a thorn in the side of the Fed because they're not really getting what they want. And I'm just, they're talking a big game, but they're not forcing the hand yet. They're not raising those rates by 50 basis points, not yet. So they're still just talking 25, 25, 25. Okay. Kuroda's last rate announcement, but not his last day. Got it. Yep, that's what I thought. So yeah, that'll be a big one. And maybe the safe thing is to not rile up the markets while he's on his way out. Maybe. But he has been a pretty prominent figure in the land and arena of central bank monetary policy for sure. You take Kuroda back to 2011, 2012. We have seen some wild movements over the last 10 years on JPY crosses. They essentially do like nothing for 9 months, and then they do crazy stuff for 3 months. And last year they did nothing for 3 months and did crazy stuff for 9 months. So it's pretty much anything goes on the JPY. But anywho, all right. Let's talk dollar index. Dollar index, a lot of indecision, in fact, but we still have some pivots to pull back to. If we have a pullback and a push, I'm still looking for dollar strength in the near term. Monthly pivot, pockets, balance from this high to low. So if the dollar continues to run a little bit stronger, that still puts pressure on the stock market to the downside. That is right now my technical forecast for the next couple of months, especially with a very obvious tightening cycle that the Fed is going to give us. And the big surprise would be if they raise rates by 50 basis points instead of the slow drip 25 basis points. Okay, that's the dollar. We did oil, which is pretty sideways, but had a great week. Friday was a big liftoff. We'll see if it gains any momentum back up towards $80 or higher. Oil, gold, silver. With the dollar pullback, gold has been pulling back as well, but I wanted to caution traders that, this pivot point, high, low, lower, high, if the dollar gets stronger, that will push gold lower. I think that if gold does get pushed lower, we're getting pushed back down into these lows, 1750 down to 1676. I really like that as strong support for gold. Okay. But it's going to be dollar dependent. So if the dollar is going to strengthen, then expect gold to settle in a little bit lower. I do really like gold longer term between 1725 and let's just say 1750 to 1650. I'm looking to accumulate some gold in there. Silver didn't really have the same type of pop to the upside, but again, pretty strong support, much cheaper prices. Wait for a trend line break if you want to get bullish. This could just continue to slide a little bit lower, but anything between $20 and $19, that's my accumulation zone on silver. So a little patience, watching the dollar. Those will be the big players there. Bitcoin, we're trading at 22,417 or 22,4. Let's just say 22,4. A couple of pattern potentials. Could this be a head and shoulders? Sure. Could be a head and shoulders where we settle back into 20K. Could also be, based on this bullish momentum, this could be a 3-drive pattern where we go up, down, up, down, up one more time. Then we break the structure and come back to 20K. Right? So if you are trading it here, that's your trend line support. As long as we stay above this and maybe have a new high, again, we reach out to this yearly pivot around 27,000. From there, I'd be expecting it to break some lows and reverse a little bit back to 20. All this accumulation was around 20 to 19,000. It's probably going to get hit again. We also have big pocket breakout levels that I think will get retested. So if we do see highs, again, this is a lot of risk appetite. If we see some fresh highs on Bitcoin, that's exciting. But I think that's a pretty good profit level as well in the near term, especially if anybody, just from a trader standpoint, I'm not talking about long-term holders, right? But from a trader standpoint, if you bought in here or added on some breakouts and all of a sudden this market's up to that yearly pivot, all those are offering some pretty good returns, right? That level's about 40% from this low to high. And I'm not even picking precise entries. I'm just saying in general, that is about 57% off the lows. And over here, about the same, about 30. Breakout levels probably about 30 to 40%. Yeah. So there's been some good offerings there on some of those Bitcoin positions, but I just think it's maybe an instrument that we have to trade this year instead of just holding on forever. But to each their own. Okay. Anything else? I could flip through some currencies. Our workspace has been pretty consistent. Directions haven't really changed much. What I'm trying to get traders ready for mentally and based on the calendar is get ready for some pre-summer pushing. We are looking for some seasonal movements. So that would likely get us through. And here's what I think we have a liftoff on. Non-farm payroll is the 10th. Okay. That kind of gives the market permission to move starting the 13th to the 17th. So coming into next week's trading, my goal, especially when it comes to currency trading, is going to be looking for some pre-summer movement, whether it's breakouts, whether it's trends, whether it's high volatility. All those things might be happening for the middle of the month, and I look to follow those alignments. So this week could be another week where the market just kind of settles in, more indecision in the stock market, probably some decent movement, but maybe not highs or lows. We might not break any highs, we might not break any lows. But after non-farm payroll, that could be something to jar the market loose. That would give us one free week of trading, full week of trading as well, leading up to the March 22nd rate decision. Which, by the way, like I mentioned, March 22nd is the Fed. March 16th is the ECB, so that's big on the euro. And then we have the Swiss, the Bank of England, and I'm sure RBA's this week as well. So we're getting some central banks coming in. This week, the next 2 weeks, 3 weeks, we're going to have probably 6 or 8 central bank. Is that right? 6 or 8? No, 7, 6 or 7 rate decisions. We have RBA this week. We have BOJ this week. We have CAD this week, right? So that's 3 currency pairs with central bank rate decisions. And then coming into the 16th, that's ECB, and then dollar, pound, Swiss, 22nd, 23rd. That pretty much covers them all because the RBNZ just happened last week, I believe, and they raised rates as well. Okie dokie. Okay, cool beans. So I do have a couple of things. I think that's about it, actually. We can go through some currencies. I can just talk direction. Aussie CAD. At this point, we took a trade off the Aussie CAD. We were short, took some nice profit at the early pivot. If we settle back in a little bit lower, which may or may not happen, we could just be long Aussie CAD now towards that monthly pivot. Position 1, position 2, position 3. If we're willing to scale in, that's exactly how I'm trading the New Zealand CAD. So I'm long New Zealand CAD. I kind of like this area, a little accumulation, pop up here to that monthly pivot. If we settle in a little bit lower, that's totally fine as well. I'm still going to look for a pop to the upside. So with the Aussie CAD, especially taking out this high from this previous high, I'm looking to see if this is, nice little swing. Maybe the market's going to settle back in for something like this. Settle back in, accumulate. This is a low, this is a high, this is that equilibrium, and then there's battle royale in here. And we'll see if there's a bigger swing in the works. But I like Aussie CAD, New Zealand CAD long right now. Aussie Swiss, I'm sticking long for the medium to longer term. Again, this might settle back in. We've got some deep left tip lows over here. Right tip lows as well, potentially around 60. So we're below 63. That's a little concerning that we're breaking 63 because we might just retest the lows and give a range. So this low is sitting around 62. We also, and this is something I'm prepared for, let's say this slides down to lows. You're like, oh no, it broke the lows. Yeah, well, it might be this pattern too. Could be a broadening formation. We could come into 61 to 6,000. I'm still going to buy Aussie Swiss. This is a huge pocket as well from COVID, COVID crash 2020. And I would still be buying this area and then look for a move back up. So I'm going to stick with the Aussie Swiss long just for carry trade potential. And if we have a big resiliency move on commodities, or if China stays pretty bullish, that would lift the Aussie. So I'm going to stay long on Aussie Swiss. Yen crosses, like I said, be ready to trade those alignments. Aussie New Zealand. This one's been all over the place. I'm still waiting for a quality setup, and we just don't seem to get what I want. So I'll wait. Aussie dollar. Aussie dollar, we were short, took our profits. Now we're waiting. So we shorted it up here, took it all the way down to present levels, and that's a pretty good profit chunk. We'll wait and see what happens next. CAD Swiss, I'm still long, but we're dipping back down. Possibly a range trade. A couple things could happen on CAD Swiss. We come back into 68. We might even come down to some fresh lows and then pop up a reversal pattern. Okay, this is going to be my profit target for the year on CAD Swiss, way up here. That's 71.50 or higher, where there's a big pocket up here, 71.50 to 72.50, but better yet would be a reversal pattern off the lows. I would have plenty of opportunities to add more trades. So that's CAD Swiss. CAD Yen, stay with your alignment. Swiss Yen, stay with your alignments. Euro Aussie, we're at 58.38. And we talked about this last couple of weeks in the Flex Trading Room. That resistance broke. It's become support. Bulls can take this up towards 1.60. So if you're long Euro Aussie, that alignment's looking pretty good to take it up to profit levels at 160. Euro CAD, we're at 45.33. Another holding point here right around 46. So we could be hitting 4,600, testing there, and then revisiting the lows. So a couple of good opportunities to set up this week. We've found those alignments pretty closely in Flex. 99.58 on the Euro Swiss. If we get back above 1.01, hopefully we're heading up to 103.50, 104.50. Euro Pound, no trade at this time. Yen follow the alignments. Euro New Zealand still breaking higher. Well, it's not breaking lower. I thought we would have maybe a little bit more convincing follow through that we have not. So this hasn't seemed to break yet, and well, I suppose it's a choppy fashion because it's been really volatile. But if the bulls are able to take out this level, or I should say challenge the level around 75, that's probably my next big zone to sell. So this is follow alignments right now. If we break the trend line, we can look to short it. If we hit resistance, I'm gonna look for confirmation to short it as well. Otherwise, the alignments are bullish until it tells you otherwise. Okay, Euro Aussie Peter, we just did. You good on that? So it's bullish right now towards 1.5950, 1.60. That's our target from last week. Euro dollar, we're pulling back towards the monthly pivot around 107. I like the 107 to 108 area to still look to short it again. This could also be a range, right? We could go from this high to this low. We could pull back to the halfway point and then drop lower with dollar strength. Or we might just see another move back up here and have a range, right? Higher on 110, lower on 105, and then we just repeat until, I mean, think about it. Big trend here, big trend here. Wouldn't it make sense that the market could just go sideways for a little bit? So if that's the case, just, temper those expectations. Pound Aussie, range bound, but bulls possibly in control towards 81, 8200. Pound CAD, keep an eye on this one. I still like resistance at 68. If we could buy it, I'd like to buy it here. If the pound CAD comes down towards this yearly pivot, I'm looking for a buy trade around 5900. Pound Swiss, I'm going to stay bullish on this one. Hopefully this is just coiling for a bigger break to the upside. Coming off this COVID or this flash crash low from September, October last year, bullish momentum. This could be an ascending wedge where the market breaks and goes higher on that next push. Time will tell. Pound yen, stay with alignments. Pound New Zealand, really choppy. I mean, Euro New Zealand, Pound New Zealand are tough, but stay with alignments. Pound dollar, bears have already come down to test support. Encourage traders, anybody short on pound dollar, protect your profits. This could be one that's poised to break and go long, something like this. If we don't break these lows, then pop to the upside towards 24 to 24.50. But you want to look for some confirmation there in smaller time frames. New Zealand CAD, I'm staying long. We are getting some pullbacks, but I'm going to stay bullish. New Zealand Swiss, possible head and shoulders trade. We are getting a deep pullback here. I'm going to stay bullish. Still, again, this low and possibly even the backside of this trend line, I don't know, call me stubborn, but I'm just going to stay bullish. Because if this is a head and shoulders and this is just taking longer on the right-hand side, that push to the upside is a big trade. If I'm wrong on the head and shoulders and this is just going to come back down and retest the lows, that's fine. Strong support, I'll still trade it. Find ways to, keep it positive rollover and hold the trade. New Zealand yen, holding alignments. New Zealand dollar, waiting for right now. Dollar CAD still bullish and it has been holding steady, 3,800, 3,900, 1.40. Big profit levels on dollar CAD. We should see the dollar CAD break loose this week. We have CAD rate decision Wednesday, non-farm payroll Friday. So this should give us a week where we can see, what this dollar CAD's made of. Dollar Swiss on a pullback, but still looking to add. So this monthly pivot, I have some pending orders on the dollar Swiss to add. That's fine. I'm still going to take it up to the yearly pivot and this pocket. So I still like dollar Swiss long. Dollar yen, 135, stay with alignments. Peso, we've been watching. Just needs to break a trend line if there's going to be long. Otherwise, I don't know. We could probably have some measure moves off this crazy. This is a COVID crash high to low. We're looking for some follow through. Dollar Sing, 34.50. A bit of a pullback here, but I'm still long towards the 37.60 pivot, which looks like I lost my alarm. 37.50 right there. 37.50 there. Okay, so I'm setting that at the yearly pivot, and that's it. All right, I'm going to jump. EuroCAD, you good on that, Peter? Just a range, right? Comes back up to 46. If we come back up to 46, I'm looking for confirmation to sell in a smaller time frame. We come back up here, I'm looking to sell it. If it goes up higher, that's okay. We talked about 4,600, 4,800, 1.50. If you don't like stepping in the way of that move, if this is going to get weaker, then obviously don't step in at 46 and sell it. What we can do instead is just wait for a trend line to break. So if this does push higher, 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 I'm still looking for 1.50 and then a pullback towards this yearly pivot around 4,000. We also have some intermediate support around 4,250. Okay. All right. If you do me a favor, for everyone tuning in today, will you click the thumbs up button for me, please? Let's try to match those thumbs up to the people watching live. And we'll wrap it up there. Equities on demand. I'll switch gears. Let's go to class. And everyone else have a good week. We'll be back on Friday. I'm just going to do an opening bell session on Friday. and instead of non-farm, just let's just do a typical or a market recap 9:30 a.m. So, again, if you traded non-farm enough with me that watch the 1 minute time frames, look and see if we have some initial news breakouts, highs and lows established, follow some flow. We'll see if there's a surprise in either the dollar or the CAD. But I'm just going to do the normal session for the recap at 9:30 a.m. Eastern Time Friday, and that's already scheduled on my YouTube channel. Okay. All right, sounds good, everybody. Thanks a lot. Have a good rest of the day. Let's have a good week. Traders in the trading room. See you soon. Okay, bye.